A very good afternoon, members and market participants. Welcome to today's open house on rationalization and standardization of penalties levied on trading members. This was a topic which we thought we need to do open house because recently on 17th April 2026, which is the last month, we issued one circular by reference number 73792 through which we try to rationalize and standardize the penalties which are being levied, wherein details were already given, but we thought to make it more accessible and explainable, we should do an open house. So today to share the details and explanation on that, I have with me my colleagues from regulatory team, Rupa Gargav, Nirmal Khetan and Priyanka. So who will be taking us through various nuances. We will keep it brief only. So we are not going to make it much detailed because already in the circular, the details are given in the tabular format and which is self-explanatory. So we'll try to keep it brief, definitely with some important facets that we'll be sharing in. And at the end, in case you are having any queries related to today's topic, especially for the Annexure 4.1, which pertains to the inspection penalties levied, which is the main component, then you can post your questions under the Q&A tab that you can see over the screen. Now, without further ado, Nirmal, Rupa, Priyanka, before we get into specifics, I believe the provisions of the circular were effective on immediate basis when we issued the circular. Still, can you brief upon the applicability facets? Nirmal, Rupa?
Yeah. Yeah, sure, Jalan. The effective date of implementation of the circular is as in the date of circular, that is the 17th April 2026. However, to make it in line with the or phase one penalty structure which we have issued on 10th of October, so we have applied a similar approach for the same. So for all the cases which are under process and all the non-compliances which are identified or determined after the date of circular, where the penalty is being reduced, this circular provisions will do apply. Further, all the cases where the date of violations falls after this date of circular, that is 17 April, these new penalties will be applicable, penalties and financial disincentives as the case may be. And all the submission based non-compliances, just like reporting of data uh, or net worth certifications, which is submitted to the inspection and membership compliance team, it will be applicable when the due date of such compliance falls after the date of the circular. So it is effective if immediately, and wherever the penal provisions of financial disincentive, it is getting on a reduction side under all the under process cases for which enforcement is still pending. For those cases also, the circular will be applicable.
Okay. So now, as I just mentioned, and you also mentioned that in the circular, though the annexures of the circulars are already provided with the details of violations and non-compliances along with the actions applicable, it is better if we can explain the key aspects to our participants.
Yes, sure, Jalan. So, for this, we can have this as a snapshot list of violations. So, this whole exercise was to make the this penalty structure a comprehensive and standardized across all the MIIs. So, for this approach, what we have done is we have segregated the penalty items based on the functions handled by the department. So, it is bifurcated into six annexures. Subpart to the Annexure 1 referred in the circular. So the first Annexure 1.1 deals with the non-compliances which are observed during the members inspection. It can be an offsite inspection, it can be an LPI, or it can be a CP joint or a regular inspection. Whatever the case may be, these are the observations that we observed, that the inspection department observes when they visit or process the alerts of the trading member. Continued with this, the Annexure 1.2 carries on the non-compliances which are based on the periodic submissions made by the trading members. So any files that we are required to submit in case of such non-submissions, whatever the actions applicable to the trading members are described under 1.3. And 1.3 similarly has the non-compliances which are for member compliance departments. and followed by ISC department in 1.4. Thereafter, the surveillance and investigation activities in 1.5 and 1.6. So all such penalty items are bifurcated by the departments which these are handled with, and accordingly, it is in a comprehensive structure available at one place. So in totality, there are 280 non-compliances for which the penalties or financial disincentive actions has been prescribed. So out of such 280 items, 155 items has been classified as financial disincentives. So the major component of financial disincentives was introduced during our phase 1 penalty structure in 10th of October, in which we have basis the representations received from the market participants. The working group has proposed this idea and has received a go ahead from SEBI. So this financial disincentives are the action for which the reportings will not be impacted. So only the reportings on the website or status reports which are sought by the members, in which the material items for which the penalty is being levied will only be classified, will be shown. The amounts which are collected in the nature of financial disincentives are not being reported for these purposes. So that gives a compliance perspective to the matter. Further, in this circular, compared to the previous exercise made on 10 October, now few line items has been modified. 53 such line items has been modified to make it more rationalized or standardized in nature, and 90 new compliances, non-compliances items have been included to bridge the gaps between the penalties and the non-compliances and the compliance requirements.
Correct. So thanks, Nirmal. That was definitely a crisp outlay that you have already explained. Now, any specific mentions to keep in mind by the members in
Yeah.
addition to this?
There are some journal notes which are introduced via this circular. So it comprises of majority 3 points. The first point is wherever any action of whether it is in nature of penalty or financial disincentive, if that amount is observed to be less than rupees 1,000, the action will be actioned as advised instead. So it is to consider the materiality of the observations and involved. So for that, this will give a relief to the trading members to some extent. Apart from this, some clarifications towards cap penalty has been made. So in various of the violations, we have mentioned that like the amount is based on some percentage of the amount of irregularity, the actionable amount, which we will be applicable in form of penalty or financial disincentive. But we some caps were introduced. For example, that 1% of the amount involved subject to maximum of rupees 1 lakh. So that cap will also be escalated if it is on a repeat instance. So if a 50% escalation is mentioned, the revised cap in the case of repeat instance will be 1,50,000. Apart from it, one major change would be like any non-compliance for which any prescribed structure is not specified in this circular. So those will be actioned as advice warning 5,000 in case of first, second, and third repeat instance, and subject to they are not impacting eligibility of TM or are impacting client fund securities. So earlier, each and every matter of such nature where there was no prescribed penalty was to be placed before the relevant authority, that is MC in our case. So in such scenarios, some procedural violations also tantamount to be placed before the member committee, which was brought up during the discussions, and accordingly this proposal was made. Then such non-critical and procedural violations can be dealt away like this. So in such scenarios, advice warning and a 5,000 structure has been introduced to meet out this.
Okay, and then we'll just, for benefit of all the participants and members here, just re-clarifying again with the third box, which is any procedural and non-critical violations. Can you just explain again? I mean, for first instance, will it be advice? For second, will it be warning? And third instance will leave you with the 5,000 penalty. Is that correct understanding?
Yes.
Okay. And then, if there are repeated instances, then shall it move to relevant authority?
No, I think it's third instance and onward, so it will be at 5,000.
Okay. So for further instances also, there will be monetary penalty levied. It will be third instance onwards, right?
Yeah. Yes.
For first, it will be advice. For second instance, repeat instance, it would be warning, and then the 5,000 comes into picture, right? For
Yes.
procedural or non-critical violations, members, please take a note. It is specifically mentioned over here, and I believe in circular also it is categorically mentioned, right?
So this is for procedural and non-critical violations which are not prescribed under the circular. So we have a list of this 280 items. Apart from this 280 items, if anything non-compliance is observed, which is in procedural and non-critical in nature, for those the section will be applicable.
Understood. No, that's why I wanted to
Ah,
re-clarify for members also in case they are having any doubts. Now, just a while ago, Nirmal, we spoke on new circular applicability. Can we show an illustration explaining the applicability nuances? Because we mentioned that for particular violations which were done before the applicability date, then what will be the treatment from the effective date? What will be the treatment? Can we just show through an example?
yeah, sure. So we see that inspection and enforcement are a running process. So penalty circular scheme in between and are issued on a particular date. In such cases, there will be many cases which are under process and many cases will be yet to come. So in this scenario, what we follow is that the violation date of that particular observation is the key factor from which it is determined that which circular action will be applicable on the same. So any we have made this as a matrix, so it will be easily understandable by all. So for example, I'll take the first item. Like my violation has occurred prior to 10 of October. So in that scenario, my prevailing circular at that point in time was 53530. So any existing item from 53530 circular with a violation date prior to 10th of October will be applicable basis the lower action of 53530, 70746 or 73792. So whatever is the beneficial to the trading member, that action will be applicable. Any new item that I have introduced in the 70746, but my violation date is prior to 10th of October. At that scenario, I have not prescribed any provision that what would be the actionable on the same. So those cases still will continue to be placed before MC. Likewise, the same goes for the new items introduced under 73792. And then we have a balance period of 70746 and 73792, which is October 1025 to April 1626. So in such scenario, lower action of existing items in 53530 and 70746, the lower action of circulars 70746 and 73792 will be applicable. And new items which are now being classified in the violation for which was issued on 17 April, those will still continue to be placed before MC. And any violations which are coming after 17 April, so violation coming, I refer to the violation date of the observation. And in these cases, the new circular of 73792 would be applicable. Now, the last item is that the items which we in the previous slide discussed for advice warning and 5,000 of financial disincentive. So those are the cases where no prescribed items are there in 73792. So for those, irrespective of the violation date, it will be applicable and it will be followed in the manner of advice warning and 5,000 financial disincentive. or it may be referred to the MC subject to that condition of TM's eligibility and risk impact on the client funds and securities.
Okay. Definitely, we hope that members you found this helpful because through this you will be able to gauge through the violation date where it will be applicable with the treatment. Now, Nirmal, in earlier process, there were specific matters to be placed before relevant authority, as we were just mentioning also. So, any changes to those in new circular purview?
Majorly, it has remained same, although few additions have been made. So I'll go through those also. So in this, the relevant authority mm, hasn't power to levy additional penalties for the necessary actions. So these actions can be imposing an embargo on onboarding of new clients AP for any period of time, disablement of terminal, suspension, expulsion, declaration of member as a defaulter, or any likewise action. So these rights still pertain with the MC, and they may, in addition to the whatever the prescribed penalty is, they may levy this additional penalty if they deem so necessary for the case. So in such cases, normally we issue an SCN. So any of the observation which is there in the annexure 1.1, which involves any action on onboarding of new client, restriction of onboarding AP, disablement of terminal, suspension, expulsion, default, or any critical violation which is deemed fit by them. In such a cases, an SCN is issued to the member apart and not following the normal course of letter of observations being issued to the members. So in such cases, what process we follow is firstly a intimation of observation is being shared by the inspection team to the trading members. So on that basis, inspection team will first see the reply of the intimation of observation, and they still feel that the observations still do persist. In such cases, exchange will issue a show cause notice. So, for this, we'll cover some portion in the next slide also. And
Mhm.
there is also a action based on the cumulative penalty. So, representations from the market participants was also made that sometimes the penalty far exceeds the members' net worth. So, in such cases, if the penalty is a major component of members' net worth, such cases should be dealt in a sideline manner and should be referred to the committee for decisions. So, in such cases, that was taken while the working group has submitted this to the SEBI. And so, if and this condition was introduced. So, if in a financial year, a cumulative penalty from the inspection observations is being observed and it exceeds 1 crore or 20% of members' latest net worth, whichever is lower, such cases will be referred to the relevant authority for suitable action.
Okay, Nirmal, just one small question over here, if you can just address. So, when we are saying if the cumulative amount of penalty or financial incentive of inspection observation, so does it specifically pertain to any annexure out of six annexure?
So 1.1 you can refer.
Okay, so for that, if in financial year it exceeds 1 crore or 20% of members' net worth, right? 1.1
Huh,
annexure related violations, correct?
yeah, whichever is lower.
Whichever is lower, definitely. Okay, please go ahead.
Yeah. So, so so these matters will be placed before the relevant authority, which includes this violations for disablement of terminal or onboarding of new clients or blocking of collaterals. But few there are exceptions to it. In such cases, these matters will be taken forward without placement before the relevant authority, the member committee. So, like we mentioned, this will be applicable for 1.1. So, or annexures 1.2 to 1.6 will be there. So, those will be dealt in the manner which has been prescribed. So, And also administrative actions which are taken by member in case of shortfall in net worth or shortfall of client funds or trading terminals not found at the locations are being observed. So in such cases, the administrative actions are being initiated at the exchange end only. So in such cases, if blocking of the terminal is being made or a collateral is being blocked, so such actions will not be placed before the MC and will continue to be taken up by the exchange themselves. Apart from it, there is also monitoring of corrective actions, which is jointly implemented by all the exchanges. So, in such cases, if any corrective action is emanating out of SEBI inspections for which the timeline is being crossed and members are still not complied, so such suitable actions, as mentioned in the circular, will follow through without placement in before the MC. And the last point for SEBI SOP circular in case of default of the trading member or clearing member. So that will also follow through without actionables will follow through first, then the cat matter will be placed before the committee later.
Okay. Before we just proceed, I again request members in case they are having any queries, especially pertaining to Annexure 1.1, which is inspection related penalty, then please post your queries under Q&A tab. Now, Nirmal, before we conclude our explanation and move to queries, it would be helpful to participants if we can share few important noteworthy points that they need to keep in mind.
Sure, Jwalan, Rupa here.
Yeah, Rupa.
Just wanted to make one clarification in the previous slide. If you can just move to the previous slide,
Yeah, sure.
where, yeah, regarding the action based on cumulative penalty. So here we are saying that in a financial year exceeds rupees 1 crore or 20% of the members' latest reported net worth. This is for the inspection matters, not annexure 1.1 alone, because if in case of a joint inspection or on site or off site, then the membership compliance related annexures would also be applicable. For all
Understood.
types of violations which are mentioned in all the annexures, not only in 1.1. Yeah.
Correct. So, members, please take a due note of that, and thanks, Rupa, for
Yeah,
clarification.
it's
Because
not limited to inspection. That's what I just wanted to.
no, point well taken, and we hope that members have also heard the clarification they need to keep in mind. So, rather than going for the annexure number, they should keep in mind, as Rupa was mentioning, it is related to inspection observations on-site, off-site, or joint inspections. Correct, Rupa? Yeah, sure. Please go ahead, Nirmal.
Yeah.
Nirmal, you're
So,
on mute, probably.
yeah, am I audible now?
Yes.
Yeah. So these are the points to be noted. So these are basically are the do's and don'ts while responding to the enforcement. So it is like please submit the complete, accurate, and the correct informations while responding to the exchange communications, along with the complete set of documentary evidences. So it will be able to us to go through it and move your case forward within the specified timelines. And please note, in case you fail to respond to the LOSCN, so it will be construed that you have no additional information to submit, and we will proceed with the enforcement action based on the documents available. Also, upon receipt of trading response, exchange will consider the same as final and complete the enforcement actions, and will be issuing the action letters and the orders. And also, please note that every amount of penalty and financial disincentives collected in through the trading members is being credited to IPFT of the exchange.
Okay, thanks, Nirmal, for that explanation. Members, as we requested, you can post your queries. By that time, we have received a couple of queries and will try to address. So, first query, Nirmal, is for the circular that we have been discussing of 17th April. Point number 4.1 and 4.3 in reference to point 7.1.1. The person is asking clarify the application for levy of penalty order received from institution client A, punching errors of similar other institutional client code modified in a client code. I mean, probably the question is not clear, but the nutshell thing is client accepted and confirmed the trade and contract STP. Can the penalty be applicable? So we would tell the person that definitely the query is related to penalty, but it refers to the investigation team. So as of now, readily we might not be able to address the query, but what I can tell is the email ID of investigation team is invg@nse.co.in, and you can just email your query, but we would request that you can just mention in explain in better way with example if possible, so that the team would be able to address back with response. So please email your query to the person who has asked this. Second thing, Nirmal, was probably in last points, noteworthy points only, you have mentioned that the member has to give response within prescribed timelines. So definitely there may be variation in the case-to-case basis for the prescribed timeline, but where do members see that timeline mentioned? So any indication on that?
Yes, that is mentioned in the letter of observation or the SCN issued to the trading member. So that letter contains that the timeline, the particular date by which they need to respond to it, and thereafter there are some extensions available to the trading member which are communicated via email to them.
Okay, but so in the letter of action, it is already mentioned as a date, due date by which they need to
Letter of
respond.
observation, it is mentioned.
Okay. Just a second. Probably another person has probably asked the same thing, but I'll just ask the question. Prescribed timeline also mentioned in circular to reply to LOLI, which is the same thing, right? Probably. Okay. Uh, are there any other timeline involved? Probably the person may be asking something else, or this is the only thing related to timeline.
I think that would be
For the member to respond, there will be timeline involved. Apart from that, okay. Person who has asked, we have already addressed it. Let me just see if we have any further queries. So I don't think so. We have any queries as of now. Just a second. No. So, still, in case members, you are having any further queries, I'll just mention the email IDs where you can email. Nirmal, you can correct me if I'm mistaken, but for inspection related thing, members can email to compliance underscore assistance @nsc.co.in. Correct? Members, for investigation, I have already mentioned the email ID, which is invg, the short form of investigation, invg@nsc.co.in. For surveillance related particulars, you can email to surveillance@nsc.co.in, which is surveillance surveillance@nsc.co.in. And for membership compliance, the email ID is compliance underscore mem@nsc.co.in. So in case related to today's topic, you have further queries later on, you can email to the respective team by referring to the details we have provided in the annexures of the mentioned circular, so that you are emailing to the correct department and correct team to receive necessary response wherever applicable. So, Nirmal, Rupa, any concluding remarks for this short explanatory open house that we wanted to do with members? Nirmal?
yes, yes.
Yeah, thank you so much. I hope the presentation was quite clear on the implementation part. And for any queries, you can always approach enforcement department. And I like, as this has been reiterated in the new circular also, for the regarding the prescribed timelines, it is always it is always good if for the exchange also, if members respond within the prescribed timeline, so that we also are able to achieve uh, the process the cases on time. So thank you so much. Yeah.
Thank you, Rupa. And on behalf of NSC and my colleagues over here, I thank all the members who have joined today's open house, and they do keep joining other open houses as well. Without a further ado, I thank Nirmal, Rupa, and my regulatory team colleagues as well to share the details they have explained in today's open house. So thank you very much, everyone. Have a great day coming ahead.